down. Let's talk about BHP Billiton, which is the largest of the world's diversified natural resources groups. Market capitalization, you have to add together the Billitons in Australia and New York and then London and here. But anyway, it's about R1 trillion, 923.7 billion. You know what? I think that might actually only be one portion of it. I would guess it's probably about 1.4 if you really put it all together. It's got a bunch of big businesses. The one is oil and gas in the Gulf of Mexico. The other is iron ore, which is principally in Australia. And then it's got significant copper assets in Latin America, basically Chile and those sorts of places. Price to earnings ratio, it says not applicable. I don't know what that's about. Maybe they had some losses. I would guess it's around about 10. Dividend yield based on historic distributions is 7.5%, but I'd be surprised if it can sustain that into the future. But let's talk about where Billiton is at. It's done some asset stripping. It kicked out the South 32 business. It's a leaner business now.
It is slightly leaner, but it's still taking some write-downs. It had to write down about $7 billion worth of assets in the US on their shale gas
so that explains the 0 PEs, because that would be debatable whether that's allowable or not in terms of profits.
In terms of their earnings and so on. But so, I mean, it's a company that is struggling a little bit. I think it's very much correlated with oil at this stage, even though oil is not, or oil and gas is not its biggest
iron ore is bigger.
Correct, yes. You know, it's been sort of trying to restructure itself. We're seeing a lot of the companies in the sector doing that. It did cut its dividend recently. It's the first time since 2001, I think, that it's cut its dividend.
Which is kind of one of the things that they said they wouldn't do, but they're still paying dividends.
Well, they're still paying dividends, and I think it's more a move to try and defend their balance sheet and trying to defend their credit rating from the very nasty credit ratings agencies out there. And, you know, they're still paying, but they are cutting it. It's the first time it's been cut in almost 15 years.
Let's have a look at the 5-year share chart, because this will tell the story. It's a monthly chart, so it's a bit ragged there, but you know, I can see it really hasn't done much. What I can tell you is that it did spectacularly well up till about 2007, 2008, had a bit of a fall, then went back to the 300 plus rands a share level at the end of 2014. But round about there in the middle of 2014, that's when the oil price took a dive from like 110 plus dollars a barrel down to like 30. And that's where the thing starts to take strain.
And that's where the pain really sort of started, So, you know, Billiton, like everyone else, is doing massive capex cutting. They're cutting back on their expansionary projects, and they're trying to reduce costs where they can and sell off and spin out assets where they can.
Not a bad start to 2016, though, because what we've seen with all of the commodity type stocks is that they did look a little bit better. They've had a nice rally now, so there've been very big moves where, you know, on one day to the next, 3, 5, 6% up, down.
Some of the stocks in the sector up over 100% in 3 months, which is fantastic. But I think what's happening is we've got this very volatile sort of accumulation pattern. So over the next year or two, maybe I suspect we'll probably continue to see really volatile moves before we see a trend reversal, because that downtrend.
But what's going to bring the trend reversal? It's going to be some sustained uptick in commodity prices, which in turn will require some sort of economic upturn or demand consumption-led.
I think that what will probably happen is we'll continue to see consolidation within the sector, and we're going to see supply cuts. That's going to be the only thing to save.
Because these oaks are all sitting good looking at each other.
Well, they're going to sell off all their assets. Someone's going to buy it, and ultimately someone's going to go out of business. We don't know who yet, but it's not going to be.
Because there have been some minor collapses in, say, the Aussie, iron ore mining sector, but none of the big guys, the Vales, the Rio Tinto, the Billitons, they're all like trying to outgun each other, outweight each other.
Correct.
Anyway, right now or not, your clients, you telling them hot or not, you telling them to buy these things?
Billiton, at the moment, I think it's too highly correlated with the oil price. I consider the oil price, I'm still slightly bearish on the oil price. I would say not hot.
Yeah, me too, not hot, I'm afraid. Okay.